welcome to today's edition of LendTech Live. Pamela Herman here with Mortgage Cadence, joined by the great Rick Grant. Rick has been in the industry for a very long time. He's the principal of RGA Public Relations. He has been a contributing writer to Housing Wire, Source Media, and you're helping all kinds of businesses articulate their pure genius.
I help a few, thank you, yes.
Just a few.
Yes,
Thank you so much for joining us.
Thanks for having me.
Okay, so Rick, let's do a deep dive.
All right.
All around strategy, technology. I'm interviewing people here at MBA,
Okay.
and they're saying to me the ticket is to have a strong vision and strategy, and that helps us guide through all of the shiny objects that we see on the floor of any technology industry conference, right? I mean, it's not just unique to mortgage lending.
Right.
It's in every sector. So let's talk a little bit about that connective tissue between strategy and technology.
Because I grimace a little bit when you say
I
it.
can see that. You look a little pinched.
Well, the truth is they're right? The strategy is the critical starting point. But when lenders get involved with technology, and I'm sure it's true in other industries as well, when they start looking at technology, the strategy becomes their technology strategy. And so now they've zoomed all the way in on their business to the tools that they're using in IT. And IT uses a lot of tools, and right now there's a lot of tools that they could employ to do what lenders do. When it would be so much better if they could zoom back out and look at their strategy from a more holistic view, right?
Define that, because strategy may mean different things for different people.
Well, you're right. So most of the people that I work with are trying to communicate with are in the C-suite. So even though it may be a loan officer or a title agent who uses the software on a day-to-day basis, they're not the ones making the decision to purchase it. That decision is all made in the C-suite. And when they do their analysis and their strategy, they're looking at that P&L, they're looking at their profitability, and they're looking at how their lending department performs, right? So when they make the tech strategy, they leave all that behind and they drill all the way down to the tools, and all the metrics that are being tracked up here in the C-suite kind of get lost in that journey, right? So now they're looking at, and I've written about technology for so many years, it's embarrassing, and I love it because the solutions, the people that make these solutions are people like Mike Detweiler, right? These guys are certifiable geniuses, and they see a problem, and they go in and they create a solution for it. And in the case of Mike, those solutions work. They don't always work though. So when people zoom in and just look at the IT department, then they're trying to decide, is that tool going to work in that situation or not? And they don't back up enough to say, is that even a situation that we need to strategically be focused on?
And how to value it priority-wise?
Yes, and priority, and in terms of cost, and in terms of how big a part of the operation it should be, and how much mind share it should take from your C-suite. How much time should they be spending watching to see if the LOS is performing the way it's promised to perform, right? I would argue that they shouldn't be spending any time with that. Once the LOS is in place, once you've got a team that's put it in place and said, this will do what we need to do as far as closing loans, the kind of loans we want, then it's all upstairs in the C-suite. It's all up here where they decide, how do we want to grow our business? What business do we want to go after? And how do we want to differentiate ourselves in the marketplace, which is getting more and more competitive. And as we move into the purchase money market, it's only going to be worse. So lenders really need to decide now, when a consumer looks for a loan, what are they going to see when they see that company? And if they see just a collection of technology tools that, we're about this app or we're about this button, and you push this button and you get a loan, well, that may work today, but tomorrow, all kinds of pressures may push that out of focus for the borrower. So instead, that strategy needs to be built around building a company that borrowers can trust, and trust to get those loans originated right and on time and meet all the customer expectations, which right now, very high. I know I'm talking too much.
No, it actually makes me think, well, the borrower doesn't know what they don't know. So
they don't, but they do know what they want, right? They know what they want, and it's never a mortgage loan, right? It's never a loan. Nobody goes to a lender and says, can I have a mortgage loan today? No.
Can I have 30 years of debt?
They never say that. I've never said it.
You've never said
it? I've never said that. So what they want is a home, and the only way to finance it is by working through a mortgage lender. So it's a very critical role. What they don't want is to be answering the same questions multiple times, to be drug around and ask for all kinds of documentation that they don't even understand.
Multiple times.
And then having it lost or having those numbers incorrect and having things change. And what they hate the most, we all do, I do, is being involved in a transaction where they feel like they have no control and no fundamental understanding of what's happening. Now we have technology.
You're going through the buying process right now, so this is
so maybe it's a little too fresh in my mind.
This is good though, because you're bringing this perspective to your journalistic approach, which has always been inside out. Now it's outside in.
Right.
How's it
and
changing?
You're right.
How's it changing your mindset?
I'll tell you. We love our loan
We're
broker.
more broken than we think.
Oh my God. Oh my God. So we have great technology, right? So they send us all the documents, all the loan application documents, and we sign them all electronically, and we think, oh, this is great. Click, 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 click. And then the broker says, all right, come in and sit down with us, and we want to finalize all this stuff and make sure we're all on the same page so we can close on time. That's important. I said, yeah, it's important because we sold our house and we're going to be on the street if we don't know it.
We'll be living under the freeway.
Yeah, and there's a bunch of us with our animals and stuff, so that's not going to look good. So we get in there and we sit down, and he lays the stack of documents down in front of us, which we know we've already electronically signed, and he asks us to go through and wet sign each one again. And we're saying, why are we doing this?
Wait a minute, you signed it electronically and then you had to sign it manually.
And the answer was, well, this is just for the file. We want to make sure that we have no glitches. So the frontline people don't trust the technology that they're giving to the borrowers who like the technology. So there's another disconnect there.
I'm seeing duplication.
Oh, there's duplication. There's
well, and just from like labor to investment in technology duplication, like how much that's adding into that cost to close.
Exactly, because the company's already spent to get the technology to close electronically, and now they've got more of this loan officer's time being taken up, signing these documents, and then if anything changes, and they always think sales change, then we sign it electronically, but are we going to have to sign it again by paper? And what happens in the processing department if they have some electronic and some paper? And they don't.
So we're okay. Let's just throw lawyers under the bus on this one. How much of this is driven by internal compliance?
Well, probably a lot. All right, probably a lot, because
are they distrusting of the technology?
Well, these people are in a position where they have to ensure that no mistakes are made, and they're dealing with a great bunch of people out there that they can't control, and they know every single one is a weakest link. So they're going to drive their lender customers, or if they're internal, their companies, to do it in as a defensible way as possible. Because I was talking about this to somebody the other day, and I said, well, what's a quality loan? Has it been defined? Who's defined this? Nobody's really defined it. It's like, well, no, because every loan is a quality loan until it's not, right? And when they find something wrong with it, then they go, oh, we should have found this in the beginning, we never found this. Now it's a problem for the company, right? So the whole legal staff and the whole compliance staff is designed to make it bulletproof. We can't make a mistake. And it can be done. There are companies that do it. Your company does it with MCAS, right? Mortgage Compliance as a Service. But it takes a lot of people. You have a whole team behind the scenes doing that without impacting the borrower. But any lender that does this internally, everything they do impacts their borrower, right? So I'm here trying to get a loan, and I'm getting kicked around by all these things so that they're safe. And at the end of the day, I can't fight with them because I need that loan to close, right?
Or you'll be living under
the bridge, right?
And winter is coming.
Yeah. Yes, winter's coming. So what I love about this show is that we get to see a lot of the tools. We get to see a lot of the people that are involved in the tech, and a lot of the C-suite decision makers come to this show, not specifically for the tech, but specifically for the relationships, right? MBA Tech is a great show for tech. I love that show. MBA Annual, where we are today, this is much more about getting all those teams together so that they can build that kind of trust that's so essential to allowing them to build the strategy that they want. But even when the lender builds the strategy, even if they all said magically, Rick, you're right, we should be doing strategy holistically up here at the top, operationalizing that strategy, getting what they want down to the front lines, it's incredibly difficult. Well, MCAS, one of the biggest selling points for Mortgage Compliance as a Service is that banks and lenders already know what their compliance strategy is. They know it. They've already figured it out. They have all kinds of wicked smart people working on it. And now all they've got to do is get it down to the front line so that every loan is done the same way. And that is a huge task. It's Well, many banks are finding it impossible, right? So they have to give it to somebody that's what they do,
Yes.
and that they can guarantee it. And that's why it's a success. But many lenders are going to continue to implement technology, implement tools. We have so many shiny tools, so many people saying, oh, this is the only way to get to the borrower. And a lot of those are going to fail because there's that disconnect between making it work in IT and making it work for the company as a whole.
I always, I'm a sucker for a really good sales page. So anytime I see something and it plays right into my pain,
Right.
I hit the buy now button.
Right.
I don't even look behind the curtain.
Right,
I don't
right.
see who the people are, the processes, the success record.
Yeah.
I wonder if the industry sort of suffers from the same thing that I suffer.
You know, they may, and it's counterintuitive, right? Because on the consumer side, we do buy on impulse, right? We have emotions, we have feelings, we have old memories. Oh, I remember that, and we buy it,
Yes.
right? But businesses typically, in my experience, and you know more about this than me now because you're the marketing expert, but in my experience, I find 4 reasons business buy on the B2B side. 1, to solve an immediate source of pain, you just identified. 2nd, to hedge against future losses. 3rd, to invest for future gains. And 4th, because it's a compliance imperative. They're required by law to do it. Other than that, there's no reason to buy, right? And so right now, lenders have compliance imperatives that they have to worry about. They have the real potential of future losses as we move into a purchase money market, right? They have the real potential right now to make really strong gains, as we've seen from some lenders that have gone out there, and it's what it can be argued. Some say it really is the digital mortgage, some say it's just a marketing method, but borrowers like it, right? So this is the time when you have that opportunity to invest for really big future gains, and it really is a source of current pain for lenders. This is the time when lenders need to say, we really need to reevaluate how we are manufacturing the loans that we sell.
I'm wondering if you could speak to what do lenders at the C-suite understand about their profit margin and what levers they can be pulling to affect greater profitability?
Right. So I have to be careful how I answer this because honestly, those people are much smarter than I am. And the only reason I know this answer, the only reason I think I know it is because I have talked to so many of them over the course of the years, interviewing them, and this is what I've heard. I've heard that knowing profitability and being able to divide it among product lines is difficult even for monoline mortgage bankers. Even the people that only do mortgage loans have a problem because they have different channels, different branches, different products, and getting that all together and finding out what's contributing to bottom line profitability is hard. But cost to close, well, that's easier. They can measure that, right? Cost to close, they can look at each deal and they can say, this is what it costs us, this is what went into that, and they can track those metrics and they can evaluate that over time. So that's...
Okay, let me push back on that because I had a conversation with the guy that I'm on board with. Mm-hmm. He's the VP of lending for this community bank, and I asked him, do you know how much you pay to close a loan? And he gave me a number, and I said, does that include labor? And he said, no. And I said, have you ever figured out your labor costs? And he said, no, we just look at hard costs. So I don't...
well, because see, I was just sitting...
Is he an anomaly? Or?
Well, I would hope so, but maybe not, right? Maybe not, because these guys have a bank staff that they have access to, and that may not be part of his particular part of the P&L. So he may not be trained to focus on that. I was just talking to the MBA, I was just in a meeting, their press luncheon, and they were talking about the high cost of personnel in the mortgage process. And they're telling us that 65%, this is MBA's number, 65% is cost of human resources, most of that on the sales side, not even compliance, sales side. So if he's not taking into account what his people are costing him internally, that's a huge piece of the puzzle he's missing, right?
So he thinks his cost is lower than it really
is. And it's really not, right? And not only is it not, but technology that can empower those people to do better or worse and increase productivity, which is another of the metrics that we really think they should chase, that can be significantly impacted by what technology they choose.
Exactly.
But if he's not looking at that, as a metric, then that technology solution isn't a solution because he doesn't see the problem.
Right.
So I don't know, maybe I should back up on my statement. I feel like...
I'm not pushing you down the street. I'm just saying in this particular case, and I wonder how many people just don't even look at the equation, understanding that there's labor.
Yeah. Yeah,
and not that the labor is going to go away completely. That's not realistic with technology. But understanding what part of labor can be offset with technology, some basic stuff.
Right, and we saw something similar in the early days after the crash with compliance, right? Because compliance expenses rose so rapidly that it wasn't even tracked in the loan department, and so by the time they saw it and started really tracking it, it was already a huge problem. But in those early days, they weren't paying attention. They may have to be paying attention to things like human resources now because, according to MBA, we really don't have enough lenders that are training their loan officers to close purchase money loans because they're so used to refis. And the refis are due to fall over 30% in the next year, according to the thing. Now, purchase money, they say, will rise 7%, which they say will be a huge offset. But think about that. That's a third of the refi business falling off again from what it is now, which is much lower than last year. And you have all those loan officers. So you're right. People is important. But again, MCAS identified this stuff. Mortgage Compliance Service identified this stuff early on. They said the 4 things you need. You've got to have the people trained up, ready to go. You have to have a proven process. The process that you know is going to result in a quality loan, right? You have to have the technology built into it, and then you have to have the guarantee. Now, in the case of the normal lender that's doing it on their own, that guarantee comes from the legal and the compliance part, and that's why everything's done twice, and it's really horrible. In the case of MCAS, you guys approach it in a different way, which is really elegant, and we won't talk about that now. But
elegant.
I think it is.
Love that word.
I think it is elegant because the lender puts it in place and then focuses on their overall strategy.
I love that. Anything that creates flow in business and in life is a beautiful thing. And elegant. Rick, I feel like we could talk for hours.
I feel like I've taken too much of your time. Thank you.
Never. Come back again.
I will.
Let's chew the bone on something completely different.
I will.
Like parenting teenagers.
Yes.
We have that in common.
Thank you.
Thank you, Rick. Appreciate your time. Thank you for joining us on today's edition of LendTech Live. We look forward to seeing you at the next edition where we continue the deep dive into how to create profitability with your mortgage lending solutions. Thanks for joining us.